Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Ed Pryor of SFC Capital to talk about the Startup Funding Club, SEIS and EIS funds. Hello Ed, welcome back to the studio. Firstly, for those who don't know, could you give us some background to your own experience and SFC Capital?
Hi Jonathan, thank you for having me back. It's good to be here. So my name is Ed Pryor. I'm the Head of Investor Services at SFC Capital. So this means I lead the team that manage our investors and also our angel network. So SFC is the UK's leading SEIS fund. We've built our entire operation around SEIS fund management. We do also have an EIS follow-on fund, but that is exclusively investing in our portfolio stars from the SEIS fund portfolio, so it's very linked to our SEIS activity as well. We've really become the company that we are today since about 2018. So since we started forming partnerships with the likes of yourself at Wealth Club, Jonathan, and also organisations like Innovate UK and the British Business Bank's Regional Angels Programme, as well as universities and incubators, accelerators across the country. They've really kind of helped us to become what we are today, which is, as I said, the leading SEIS fund with more investors, more exits, and have won Best SEIS Fund Manager at the EISA Awards for the past 4 consecutive years.
So Ed, we're here today to talk about the SEIS and EIS funds. What do they aim to do for investors?
Sure. So the purpose of our funds is to give investors a broad exposure to the best startups we have in the UK, and that's across a whole range of sectors across the innovation economy. So investors can expect to receive between 15 and 20 startups in their portfolio, taken from sectors like life science and medtech, biotech, B2B software, fintech, climate tech is a big area of ours as well. So really we're looking across that entire innovation economy into the fertile sectors that give our investors the best chance of sizable returns at the end of the process. A key feature of what we do for our investors is deploying quickly. So we run quarterly SEIS funds, which is quite unique in the market. Most operate seasonal towards the end of the financial year, but we deploy throughout the year. And secondly, we've also got a track record of delivering cash back to investors quickly. So I can't sit here and say we're going to deliver 10 or 15 times returns because it's not possible. It hasn't been done before. What I can say is that we've got a track record of delivering cash back to investors after about year 3 onwards and targeting conservative 3 times returns on your investment overall.
And so Ed, turning to the SEIS funds, the limits on the amount you can invest in an SEIS qualifying company have been increased recently to £250,000. Does that impact the way you manage these funds? How does it impact the companies that you invest in?
Yeah, it's had a huge impact on the market overall, and especially the startups and the quality of startups that we're able to invest in. So this change has also coincided with a change in terms of the age limit at which a startup can qualify for SEIS. So it was within 2 years of trading, it's now within 3 years of trading. So that means you've got more established businesses that are available for SEIS investors. The impact that this is having on the market is that you are seeing larger initial rounds raised, which is really important. So previously, we might have seen about 250, 300,000 being the average first round investment amount, the average first round amount or target amount. Now we're looking at about 500,000. That's really important because we've got better equipped startups going into that global market. And if we compare ourselves to America, for the American startup environment, we've always suffered with a problem of scale. They raised larger rounds, they had better resource businesses than us. This is a really important step forward in making us a better equipped early stage economy.
So Ed, turning to the companies themselves, what are you looking for in a good SEIS company?
So as I said before, we invest across a range of different sectors, but there are certain things that we look for in every business that we invest in. Because we've been doing this for almost 10 years now, we've developed a unique scoring system that we take every business that we consider through. So we're looking at about 4,500 businesses a year. So this, helps us deal with that scale, but also helps us to work out which businesses have the best chance of success. Now, we give a lot of weighting to the founding team, their capabilities, their backgrounds, as well as how much innovation is involved in the business and the market they're exploring. The founding team is really important because at the earliest stages, which is where we invest, you can never guarantee that a business is going to be successful. but you can have a very good idea on whether the business has a chance of being successful based on who that founding team is. So that scoring system is a really important part of our evaluation process. All businesses go through it. Those that make it through it will end up in our IC committee and beyond. So there's no, to kind of row back to swing back to your question, there's no set thing that we're looking for. We're looking for innovation, great founding teams, and fertile markets, basically.
So rather than sector, it's really about the people, isn't it?
It's about the people. It's got to be about the people at this stage, and also the level of innovation that's involved. We are a kind of innovation hunters. That's what we've always been. That's what we do. But the people involved in driving that are the most important thing at this stage.
So how do you source all of these investments?
We look at about 4,500 businesses each year, and we've built up very big deal flow networks across the entire country. So we're the most active investor in the regions, and we do invest across the entire country, not just the southeast and London. In order to source these investments, we've got core deal flow pillars. So these have been kind of developed over the years. Firstly, we're partnered with leading universities, so we invest in a lot of spin-outs. So they're universities like Imperial, Cambridge, Oxford. Sheffield is a brilliant innovation hub up there. We've also partnered with a number of leading accelerator and incubator programs. So this is various science-based accelerators like Cambridge Future Tech, but also consumer-based accelerator programs like the Beauty Accelerator program. We've got an exclusive partnership, and they've produced some of our best consumer-facing businesses like Fussy, you may have heard of, which is all about natural products in the bathroom. They were very successful on Dragon's Den, and you see them quite a lot around the place. We've also got another deal flow partner pillar in our angel network. So it's one of the most active angel networks in Europe, and we've got a lot of super angels in there who are brilliant at sourcing deal flow. We've also got a new pillar, which is organisations like Innovate UK. So we are a new partner of Innovate UK, and actually we've become their most active partner in relatively short order. That has exposed us to the most amazing amount of innovative talent that I've seen, and it's really exciting. So we're being able to boost our portfolios now with deal flow from those areas, tapping into the sorts of innovation that we hadn't had a chance to before. So it's really encouraging that. And then the final pillar is just organic. So we are the biggest SEIS fund in the market. We're a very significant voice in the early stage community. So we get a lot of businesses approaching us directly. So they're kind of how we manage that deal flow process. And it's a lot of businesses that we have to look at because we make a lot of investments each year. So everything is systemized and processed, and it's been kind of worked on over a number of years to put us into the position we are now.
I guess the key is now you probably are seen as a destination for, if you want SEIS funding, you're probably a name that people have heard of now.
Yeah, absolutely right. And as I said at the beginning, it's really since 2018 that we've grown into the brand we are now, and it's through relationships that we've built in the market, but also just being in the market so long and having so much success in the market. It does make us an attractive proposition for startups as well as investors.
So turning to the current environment, it's pretty gloomy outside. It's been pretty gloomy in the economy. Does that affect the way you invest or the companies you back?
I think it's important to draw a distinction between the later stage markets and the early stage markets, and often that can get lost in the noise. The early stage markets are still pretty vibrant. We are seeing a natural migration ourselves towards more science-based and research-based companies. So we're doing a lot in that life science, medtech, those sorts of areas. Now those types of companies tend to have longer R&D phases and aren't so exposed to economic conditions. So that's been a natural kind of focus shift for us, moving towards those sorts of areas. But really, startup investing, you've got these are long-term horizons that you're looking at here, you're dealing with here. So actually, if you're not expecting an exit or a realization of returns for 7 to 10 years, they actually become a more appealing investment option in kind of periods of economic instability, because that investment is protected over a long time, and you're not actually expecting to realize the outcome for a long period of time.
So potentially some way removed from the current economic environment.
Yeah, it is, and it hasn't affected our investment strategy so much. Actually, we may be doing less consumer-facing businesses because they are more exposed to those sorts of headwinds, but it hasn't really. We're investing more this year than we ever have before, and as I said, the level of innovation coming out of the UK is extraordinary right now. We're third to the US and China in terms of our venture capital environment. That's been built through the SEIS scheme, the EIS scheme, and the innovation has just poured out as a result.
So turning to companies, any recent examples of companies you've backed?
Yes, so we've a number. We're actually deploying a fund as we speak. So there are a few in there that I could mention. One is a really exciting company we've just led. They've closed their £1 million round. So they're called Kai Hydrogen. They use biomass to produce green hydrogen much cheaper, which is really exciting. Another company called Bird's Eye View. So they're an insurtech company, and they've developed an automated underwriting platform that helps underwriters underwrite risk associated from climate and weather much more efficiently and accurately. That's another really exciting business, but also a really exciting market. The insurtech market is extremely fertile. This is another reason why we're so big on diversity, because if you become too attached to one sector, particularly when you've got a long time horizon, you become vulnerable to changes within that market. So we like to tap into different fertile markets at the seed stage, and insurance is one of them.
So turning to companies you've backed from a few years ago, any sort of more established holdings that you're keen to talk about?
Jonathan, lots that I'm keen to talk about here. We're in a really good moment at SFC with lots of exits, which I'm sure we'll come on to. There are a number of companies that I've been working with in the Angel Network that I could draw upon now. So one great company is called 4D Bio. They've actually recently just been valued at 40 times our original investment, and we only invested in 2020. This is a really special company. So a big problem for surgeons and the NHS is that when they do a surgery, they often have to leave material in there to support the development of bone or flesh, and then have to come back for a second surgery to take it out again. So you can imagine the clogging that can ensue in the NHS as a result. What 4D Bio have done is create resorbable materials, so there is no need for that second operation. So that's a really, really exciting company. Another one that I'm working with at the moment, they're about to close a £3 million pre-Series A raise. They're a company called Blue Sky Space. So they are launching small-scale satellites into space, and they're going to be selling space data to universities on a subscription model for the first time. So the space market in the UK is exploding at the moment. It's really, really exciting. But space data historically has been dominated by governments and government agencies because they've been the ones paying to access it. Blue Sky Space are changing that. So in a £20 billion market, they're giving universities and private organisations access to this space data for the first time. So that's another really, really exciting business. They've got a lot of fund investments in them, and we're really hopeful for that one too.
Oh, very good. So you mentioned you were working with some companies there. To what extent do you get involved with these companies?
Quite a lot, actually. So particularly in the early stages, those first 12 to 18 months are really important for putting in proper government structures in place, making sure that the business is launched in the right way, and attaching them to different kind of partners and relationships that we've got that can help them on that early stage development. We also have the Angel Network, which I think I'm right in saying is the second most active angel network in Europe. That is a real source of comfort for our startups that come through our fund process, because in the early stages, really, you can boil down the job of a startup founder to part-time product manager, part-time fundraiser, except you're actually full-time on both of those. So actually having access to the second most active angel network in Europe is very, very helpful. We have a traffic light system for our portfolio. So we've invested in more businesses than I think anybody else in the country. Our portfolio is about 450 companies now. We have a traffic light system that helps us manage the businesses, so we can keep track of how they're doing at any one time, and divert attention to fit that. And actually, over the last 12 months, we've really put a lot of emphasis on exits. So most of our investments have come since 2018. So we've got a part of the portfolio that is coming towards that time now. So about 12 months ago, we hired someone called Jason Drucker in to lead our portfolio. Now he comes with 7 years corporate M&A as a lawyer, and 7 years as an inorganic growth strategy expert. So basically, he is an exit junkie, you could say, and he's been really influential in working with some of these companies towards an exit, based on his experience and relationships as well. So we're working with the startups throughout their life cycle in many different ways. You won't get the same sort of interference or the same sort of management that you would get in a private equity company, because that's not how it works. We don't want to run their businesses for them. We're investors only, but we do make sure that they've got strong support throughout the journey.
So Ed, you mentioned exits there. Any recent exits you can talk about?
Yes, so we've actually just completed 3 in the last couple of months, which has been really exciting. We've got another 3 that should close within the next month. That brings our total number of exits to 20, which is completely unique in the market. The average return on each exit is 8 times, which is again great. And in terms of, we actually just had our biggest exit very recently. We part exited a company a few weeks ago called Cognizant for 49 times the value of our initial investment. And actually, when you include the SEIS tax relief, that then goes up by double. So it's been a really, really positive time for SFC in terms of exits, and we've got a lot more coming. As I said before, we've done most of our investments since 2018, so we're coming up to the point where we've got startups hitting that 4-year mark where we expect exits to start happening from.
Whilst those exits sound great, clearly investing in SEIS is high risk. How risky is it? And if we take a typical portfolio, how many failures might you expect?
Sure. So SEIS funds are early stage, and so naturally they come with inherent risks attached. There are various things you can do to mitigate those risks, such as building out a larger portfolio. So for us, it's between 15 and 20 businesses, and building diversity into that portfolio to tap into different market opportunities and spread that risk as well. But in early stage investing, you live by Pareto's law. So you're going to drive 80% of your value from 20% of your portfolio. And really, it's not the losses that an investor should be thinking about, particularly with SEIS funds, because with SEIS funds, when you get a loss, you then claim your loss relief at your marginal rate. So it's actually a good thing. You should be more worried about the zombies, so those that aren't going to drive any value but are just kind of living on. We make a big effort to actually close off those businesses because we want to claim the loss relief for our investors. But really, over the course of a portfolio, you're going to find 3 or 4 potential superstars in there that are going to drive most of the value. And then you'll have smaller exits that deliver a bit of a value along the way.
And so finally, to sum up then, Ed, for those that want to invest in an SEIS or EIS fund this year, why should they invest with SFC Capital?
Well, firstly, I'd say it's a great idea to be investing in an SEIS fund. The market is in an exciting place with the changes brought in, and the level of innovation is really extraordinary. So it makes an exciting investment opportunity. For SFC, SEIS is what we do. We're market leaders for a reason. We have more exits than anybody else for a reason, and we've really spent the last 10 years firming up our position in the market to deliver the best service for our investors. We've been recognised as the best SEIS fund manager for the previous 4 years, and we expect that form to continue.
Ed Pryor of SFC Capital, thank you very much.
Thank you, Jonathan.
If you're watching on YouTube, please press like and subscribe to the channel for more.